Welcome back, everyone. So, Bitcoin is coiling tighter and tighter under $65,000. And while everyone is busy panicking about Michael Saylor selling and some so called Bitcoin civil war, the chart is quietly setting up an expansion move. In my opinion, the technicals are telling a much clearer story than the headlines. So, today, the full technical read, the compression, the levels, the momentum, and then my honest take on why the Saylor drama is mostly noise. Let's get into the chart, by the way. And when we get to the Sailor part, I will show you the one number that, in my opinion, kills the entire panic. It's smaller than you think. So the chart layer by layer, and I will keep every term simple as we go. First, the structure. Since the bounce of $58,000 price has been squeezed into a tightening range between roughly $62,000 and $65,000, each swing is getting smaller. In technical terms, that's compression, and compression is stored energy. The longer price coils like this, the bigger the expansion move when one side finally breaks. In my opinion, we're days away from that break, not weeks. Second, momentum. Daily RSI, the gauge that measures buying versus selling pressure, is at 47. That's dead neutral. After being oversold at 30 during the flush, it has fully reset now. And here's why neutral matters in a coil. It means momentum has room to run in either direction. Nothing is stretched, the spring is loaded, and nobody's leaning on it yet. Weekly RSI at 37 tells you the bigger time frame is still near the lows, so there's a lot of upside room on the higher time frame too. Third, valuation, the MVRV score, simply whether Bitcoin is cheap or expensive versus what holders actually paid. It's at 0.35, still deep in the historical accumulation zone, the band where long-term buyers have historically done their buying, so the coil is happening at cheap prices, not expensive ones. In my opinion, that details matter a lot for which way this resolves. And the honest flag, the fear index slipped from 28 back to 22, back into extreme fear. Sentiment is wobbling because of the headlines we'll get to. But historically, compression plus cheap valuation plus extreme fear resolves up more often than down. Not always, but that's the statistical lean. Now the exact levels, because there's one line above us and one below us, and in my opinion, whichever breaks first decides the whole month. And also, if you want to trade with us, you can take advantage of a free bonus using the first link down below in the description. You click the link, you register on BitUnix, and only after you register, you are already going to get 20 USDT completely for free. Then make sure you deposit at least 100 USDT, and you get another 20 USDT on top of that. And when you open up your first trade, you are going to get even bigger bonuses. So make sure to use the first link down below in the description. The map, one wall, one floor, one staircase. The wall, $65,000. This level has rejected price twice already. The rule I use, and in my opinion, this is the single most important rule in the whole video, is that it takes a daily close above 65,000 to count. A week through it means nothing. Weeks are just stop hunts. The candle has to finish above the level. That's the confirmation. The staircase above, if $65,000 closes, the next resistance is $68,000. That's the 200-week average, the long-term line that separates bear market structure from recovery. Bitcoin has spent this whole downturn below it, reclaim it, and in my opinion, the bear phase is functionally over. Above that $74,000, the 200-day average is the trend target. The floor, $60,000. Here's how I read support. Simply, as long as every dip prints a higher low above $60,000, the recovery structure is intact. Buyers are stepping in earlier each time, which is what accumulation looks like. A daily close below $60,000 breaks that structure, and then $58,000, the swing low, is back in play. So the whole technical setup in one sentence: compression between $62,000 and $65,000, neutral momentum, cheap valuation, first daily close outside the box tells us the direction, and everything else is waiting. So now let's talk about the Sailor drama, because in my opinion, once you put one number next to it, the panic looks ridiculous. And here's the quick version, because the chart matters more, but you need this context for why fear is elevated. Sailor's company strategy broke its famous never sell rule. It sold $216 million of Bitcoin to pay dividends. Sounds scary. Now the number, they still hold about 843,000 Bitcoin. That sale is roughly a quarter of 1% of their stack. In my opinion, that's not distribution, that's a company paying a bill. The market is reacting to a broken promise, not to actual supply hitting the market. Even the big bank that criticized him, Standard Chartered, said that the real problem is the confusing messaging, not the selling. Their point: communicate the new plan clearly and strategy might never need to sell another coin. And then they capped their $100,000 year-end Bitcoin target target while saying it. Meanwhile, Sailor just posted his classic orange dots, which has historically preceded buy announcements, not sales. And then the Bitcoin civil war over the network rules. One number, the proposal needs 55% support to activate. It has 1%, in my opinion, headline noise, nothing more. The one real date on my calendar is July 30th, Strategy's earnings. Ugly numbers there could shake sentiment again. Decent numbers and this whole story fades. And not only that, if you still haven't used the first link down below, now is really the time. You click the link, you register on BitUnix, you get 20 USDT for free just for signing up. Deposit at least 100 USDT and you get another 20 USDT. And when you open up your first trade, you get even bigger bonuses on top of that. Everything is in the first link down below in the description, by the way. Now, here are two scenarios straight off the levels. Now, scenario one, breakout. My base case, honestly. The coil resolves up. We get a daily close above $65,000. Real confirmation, not a week. With momentum neutral and valuation cheap, there's fuel for the full staircase. $68,000 first, the 200-week line that ends the bear structure, then $74,000. If the Sailor noise fades or he announces a buy this week, that's the spark. Scenario 2, July 30th earnings come in ugly, sentiment cracks, and the coil resolves down instead. We lose $62,000, test the $60,000 floor, and here's my honest read on that. A dip that holds above $60,000 is actually a buying pattern, a higher low inside an accumulation zone. It only turns genuinely bearish on a daily close below $60,000, then $58,000 is live and we reassess everything. Bottom line is, the chart is a loaded spring at cheap prices. Compression, neutral RSI, accumulation zone, MVRV. In my opinion, Sailor panic is overblown and the only inputs that actually matter are a daily close above $65,000 or below $60,000 plus July 30th on the calendar. None of this is financial advice, by the way, just my honest technical read. Trade your own plan and manage your risk, please. The wall, $65,000, the floor, $60,000, the noise, everything else. So let me know in the comments which way does the coil break. Thank you so much for watching, and if you haven't already, drop a like down below. Subscribe to the channel as well, it's much appreciated, and I will talk to you guys in the next video.